Cybersecurity threats are evolving faster than ever, and banks and financial institutions are under pressure to stay resilient and to make sure processes and workflows are more robust than ever. But with regulations like DORA in the EU and the New York CRR 500, how do these cybersecurity rules really compare? Are they just different names for the same thing? And if you're a global bank, how do you deal with both? In this video, you'll learn the 5 key similarities as well as the differences between DORA and the New York CRR 500. And at the end of the video, I'll share some insight that'll help you stay on top of both. I'm Kevin. I've been in risk and compliance for over 15 years. From head of audit and banking in New York to chief risk and compliance officer at a fintech in Europe. I've experienced the pain points and learned what really works to both stay compliant and on top of the risk. So firstly, DORA applies across the EU, so in Europe. It's designed to protect the financial institutions in Europe to be able to withstand and recover from cyber attacks. Meanwhile, the New York CRR 500 is determined by the New York DFS. It specifically applies to banks, financial firms, and insurers operating in New York. And that's where things can get a bit messy, because if you're a global player, a global bank with presence both in Europe and New York, you'll be impacted by both. So both of these regulations aims to protect financial institutions, but how do they really compare? First, let's talk about what these two have in common. The focus on the financial sector, so both DORA and the CRR 500 focus on protecting banks, insurance, and financial service providers from cyber risks. Incident reporting, so both require financial firms to report incidents to regulators, improving the collective response to solving an incident. Risk-based approach, perform risk assessments to stay on top of the risks that you're exposed to, and to have cybersecurity frameworks in place to deal with those risks. Third-party risk management. Both DORA and the CRR 500 emphasizes the importance of following up your supply chain and assessing and following up third-party vendors, providers, and suppliers. The reason for this is to make sure that your suppliers don't get compromised and compromise your systems as well. Governance and accountability. Leadership and the board are responsible for cybersecurity compliance under both regulations. Now, here's where things start to differ. DORA regulates banks, crypto firms, and even third-party tech providers. So the big cloud providers like Amazon and Google will also be directly regulated by DORA as well, most likely. The CRR 500, however, directly applies to banks and insurers, but not tech companies. DORA emphasizes operational resilience in a much broader sense, including stress tests, contingency plans, and regular cyber exercises, while the CRR 500 emphasizes more technical requirements like multi-factor authentication and encryption. Also penalties. So DORA could impose fines of up to 2% of the annual global turnover, whereas under the CRR 500, the fines and penalties are more up to the New York DFS on a case-by-case basis. So how do you deal with both, staying compliant and efficient at the same time? Well, if you're a global bank with presence both in Europe and New York, the last thing you should do is treat both DORA and the CRR 500 individually with 2 sets of policies and multiple workflows. Focus on the similarities. Create or tweak your incident reporting to align both with DORA and the CRR 500. This way, you'll only have one process to deal with, while at the same time complying with 2 regulations. The same principle applies to third-party risk management. Now, DORA is more concrete on what it expects in a third-party follow-up. So make sure you have these requirements as part of your global policies. Because in all my conversations with the New York DFS over the years, they were very rarely bothered if we did more than what they were expecting. And lastly, don't get too hung up on the fines and the penalties. If you're able to demonstrate that you have robust and good workflows and processes, risk assessments, and proper governance, you'll most likely be okay, no matter which regulator comes knocking at your door. So to wrap it up, DORA and the New York CRR 500 share the same mission, which is basically to ensure that the financial sector stays resilient and robust against cybersecurity attacks, and to make sure both your money and my money stay safe. But while DORA is more focused on operational resilience in Europe, the CRR 500 has more technical requirements in New York. Which approach is more effective? Well, that depends on your perspective. So if you work in the financial sector or in cybersecurity, please let me know in the comments. If you liked the video, please subscribe and like, and make sure to check out my other videos on DORA and risk and compliance matters as well. I'm Kevin. Thanks.